Cool. So there we are. Yeah. Also, I noticed the volume when you were speaking was a bit low. So if you're trying to say something and I'm not hearing you, you could always do the raise hand thing, or you could always WhatsApp me directly if for whatever reason I don't hear you. All right, cool. Okay, that was actually a little better. I don't know if you were closer to the mic or you turned up the output, but whatever it was, that was better. So let's hope. All right. Okay, cool. All right, so good afternoon, finally. Okay, so ladies and gents, right. Okay, so we've been dealing with revenue accounts the past couple of weeks, right? We said revenues and expenses are kind of two things that go hand in hand with business, right? People get into business because we want to make a profit. The simple calculation for profit, if you think of your regular CSEC math stuff, is selling price minus cost price. When you scale up selling price, that's the revenue you earn, right? And when we talk about the word earn, so to earn revenue, you have to do so by providing a good or a service to a customer. And then the customer has to pay you for doing whatever you did. So you earn your revenue by providing a good or a service, right? Expenses are incurred, and you incur an expense by using a good or a service. So when you flick on the lights, you're using up electricity, you're causing the expense to come into existence or to increase, right? When you sign up for a Wi-Fi package and you sign a contract, you agree to pay a particular monthly amount for a particular level of service, right? If you hire people and they sign contracts as they should, right, you also agree to pay them a particular amount for a particular level of service, right? One sec. Yeah, no problem.
Do you have any questions with semicircles?
You can check the gray or the blue text. I think, yeah, if they're not outside there, because I've seen some of the golden ones.
I had a few from inside. I just couldn't
Yeah.
find any of that. Any questions in the exercise that are semicircles?
Yeah, I don't have anything offhand.
Yeah, so
But
sectors.
you can do sectors, yeah. Okay. Because I mean a semicircle is on the way to a sector.
Okay, cool.
And they should probably have at least one with a semicircle.
Okay, cool.
If not, just make something up.
Semicircles, the formula for that would just be the same regular area divided by 2.
Yeah.
Okay, cool.
All right. Yeah, sorry. Yeah. So we have selling price scaling up to revenue, cost price scaling up to expenses. So we have the incurrence of expenses. Now, we did expenses in January. We spent quite a while on that, kind of because I started late, and then during class I was falling asleep. So I took kind of extreme measures today. So I had a coffee on the way back from picking up my son, but there was an espresso. So we'll see. So I might be up for class and up tonight, but yeah, anyhow. So yeah. So hopefully, yeah, that I don't need to take a walk. But if I do, it's not a problem, right? Anyhow, coming back on point. So we did expense accounts and we're in process for revenues. So with a revenue, right, we said like here, hold on, why aren't all of them not like that? Okay, so hold on, no, sorry, one sec. Yeah, so with revenue accounts, right, we talk about the amount earned and the amount received, right? So if you provide service to a client, right? So MJ Limited provided services to a client and in so doing earned 500 and the client paid them 500 by check, right? So if the client paid you exactly what was earned, all is well and good, right? When we talk about recording it or accounting for it, so the revenue account, right? The amount received will go on the credit side. Because if you think about it, in the bank account where the money is actually going to, our double entry hack is your credit where the money is coming from and your debit where it's going. So the money is coming from the earning of the revenue. So you have to credit the revenue account, right? And the figure there will say bank because you've earned the money, right? So it's coming from here and it's going to your bank account. So remember, bank is an asset, right? If you receive money from having provided a service, the amount of money you have is increasing. Bank being an asset, to record an increase in an asset, you have to debit, right? So that's why we debit the bank. So again, this is a debit to the bank account, right? Let me actually zoom in a little bit more, right? So this is the bank account here. This is the debit side, and this is an entry. Shamarice, I think something fell, some paper, right? Don't know if you needed it. Yeah. So this is the debit to bank. Even though it says revenue received on the debit side, right? So one of the biggest mistakes people make every year is that they say, well, sir, that's a debit to revenue. And I'm like, no, it's not. That's a debit to the bank account that says revenue, right? But I understand why you might think it is the other one, but it's not, right? The entry exists in the bank account, right? Right? The T account, right? The name on the top here is bank, right? And any entries under this are entries in the bank account. So this is the debit side. So an entry on the debit side of an account is a debit to that account. All right. Similarly, this is the service revenue account, and this is the credit side. Any entry on the credit side is a credit to the revenue account. Right? So here, you're not crediting bank, you are crediting service revenue. The word bank is the details, right? And it tells us the name of the other account affected, right? Or where the money is going. So, because again, like I said, our double entry hack, right? Which will work for basic transactions, such as the earning of revenue, the incurrence of expenses, payments of liabilities, etc., etc. All those basic stuff, you can get away with credit where it's coming from, debit where it's going. What is it? The money or the value, right? Because sometimes we have credit transactions where money is not exchanged at the point in time of the transaction. But what happens is that you have value being exchanged and promised. All right. Now, again, I know I kind of over-explained, but I also want to get the brains in gear, right? So if you receive, right? So the money here is the amount of money received from the client, and it goes here. And this blue figure here is what we call the income statement figure. And this is the amount earned, right? So the amount earned, right, is, again, when you provide a good or your service, you and your client would agree on a price that they'll pay you. So that's what you will earn by doing the thing for the client, right? And of course, all revenues and expenses end up in the income statement at the end. So this ends up here, right? Now, this is not a T account, although there used to be a T account format for it called the trading and profit and loss account. Quite a mouthful. All right, it's now shortened to the income statement, and revenues are credited there. So you're seeing the debit here. So technically, this is a credit here. So it's not that it should exist on this side, because that was the kind of trend above, right? Because we had credits. That's the credit side there, right? So again, this is not a T account. So it doesn't have a debit side and a credit side. We have credit items in it as well as debit items. So again, it's a little bit of an inconsistency which throws some people off, and it's something to which you just have to kind of get accustomed. But I understand why it might be given trouble, right? Anyhow, so long story short, if you earned this much and you received this much, cool, all is well and good, right? If, however, let's say, right? So example of accrue. So we can have a situation where the amount earned, right, was 2,500 and the amount received was 2,000. So the initial example and not the initial example, the initial observation and the obvious thing there is that we didn't receive everything that we earned, everything that we were owed. Because think about it, when you provide your good or service for the client and you do what you're supposed to do, and the agreed upon fee is 2,500 and they hand you 2,000, you want to know what's going on, right? Because they short pay you by 500. That's 20% of the agreed fee that it didn't pay you, right? So any amount that is left outstanding, that is not received by you, despite the fact that you have earned it, right? That's called an accrued portion of the revenue. Just like with expenses, if you, for example, had a rent figure of 3,500 and you only paid 3,000, you're short pay by 500. That 500 would be an accrued expense, all right? Anyhow, we're talking about revenues today, right? So you earn 2,500, you only receive 2,000, so therefore they're still owing you $500, right? So down here, right? So the amount actually received is 2,000. That goes on the credit side there, and of course the debit side the bank. But I didn't show the bank account. All right. The income on the debit side, you have the income statement figure. That's the 2,500, the amount earned. Right. So this item goes here. Oh, hold on. What was the color from before? Oh, it was yellow and blue. Okay, cool. So let me change that color back to the same cap. Whoops. What went on there? Hold on. Sorry. Yellow, right? And the amount earned is the blue amount, right? So again, here I'm just showing the account for the item. I'm not showing the income statement side of it or the cash book side of it or the balance sheet side of it, right? So, right. So what would happen here is that if you have 2,500 on this side and 2,000 here, we clearly need 500 more on this side to make the debit side equal to the credit side. So that's the balance carried down. And on top of that, it's an accrued portion, right? Or an accrual, right? And then if it's carried down from the credit side, and it's going to be then brought down on the debit side thereafter, right? Right? And a debit balance in a revenue account implies that it's owed to you, right? It's an asset, right? So please note that the accrued revenue portion is brought down on the debit side, and this corresponds with the fact that an accrued revenue is classified as an asset, and assets have debit balances brought down and stuff. All right. Okay, cool. Now, so that's where you earn some money and you didn't receive enough. You receive less than you earned, right? That's an accrued portion of a revenue or an accrual, right? Now we have a prepayment. So this is the opposite. So let's say you earn 2,500, but they paid you 28 for whatever reason. Let's say maybe you bill them the wrong figure because you know what, 5s and 8s on keypads they're similar, right? Or maybe the handwriting was kind of bad, so the 5 looked like a 8. For whatever reason, they paid you an extra 300. So you have a prepaid amount, right? So if you receive more than you earned, right, the surplus amount, right, which is the 300 in this case, is called a prepaid revenue or prepayment, right? Now, prepayment sounds a bit more generic, and both revenues and expenses can be prepaid. So if you should try to be as specific as possible, all right? Oh, you have the same text? Is it on? Let me see. It's a different edition, but the content is practically the same. Yeah, Robinson and Sheila Robinson and Frankwood, right? Yeah. Okay, yeah. So if you earn 2,500, that goes on this side, right? So that was the blue. Blue. And the amount received is the yellow. I would have put a green, but I find sometimes the green and the blues look a little too close. The yellow stands out a bit, it's a bit more contrasting, right? And the amount, right, so in this case, the 2,500 on the debit side is less than the 2,800 on the credit side. So what ends up happening is you need 300 more on the being carried down from the debit side in order to make the account balance, right? And this is the prepaid amount. And it's brought down here. Now, a credit balance in a revenue account. Now, revenues themselves are credit items, right? They're supposed to have credit balances. But if this is at the end, after you make what you call your income statement transfer, your closing entry, if you still have a balance, that implies that, hey, it's either prepaid or accrued. And if it's on the credit side implies a liability, right? So see, please note that the prepaid revenue portion is brought down on the credit side of the account, right? And this corresponds, right, with the fact that a prepaid revenue is classified as a liability, and liabilities have credit balances at start. All right, okay, so that was the little review of the stuff we did previous week. So I'm going to continue today. So what we're going to do, we're going to do a few examples. We're going to do a couple of examples. You're going to get some stuff to work, and we'll see if we can get to the past papers today. If we don't get to it today, then we'll get to it next week. It's not a problem. All right? Yeah. So we have class next week as per usual. The following week, we should have classes per usual. Right? So just for Carnival Friday, I don't know. The road is be a mess. Right? And you all probably wouldn't have school anyway. Yeah, so to wait till quite 4 o'clock in the evening to then have lessons till 6 on Carnival Friday evening, probably not a good idea. So that day we might write off and maybe just make it back up the next month or something, right? Because the next month we'll have, no, it'll only have 4 Fridays. Anyhow, we'll deal with that. Okay, right, so let me do what I said I was going to do. I wonder if I should do stuff like this. No, you know what? I know, right? So, okay, so RQ2. All right, so revenue account questions with opening balances. Right, so we'll call this one example one. Let me just take out some stuff here. Right. Okay, cool. So revenue account questions, open balance is set 1. Oh, let's just set 2 down here. Well, I can't. Okay. Which topic is this double entry? Yeah, well, it's revenue accounts, but yeah, it falls under double entry. Okay, cool. So so accrued balance at start. Example 1. So let's do rent revenue. Okay, so let's say we have an accrued balance at start, right? Safe Palestine, good afternoon. Good afternoon, how are you doing? Good to have you on. Thanks for being part of the life. Right, so accrued balance at start. So let's say, so as we said, an accrued portion is something left either unpaid if it's an expense or unreceived if it's a revenue. So what's happening here is that people, well, somebody owes us, let's say, easy figure, 500. We're going to start out with 500, right? Okay, yeah. And the amount, so let's say the amount earned for rent revenue is 3,500. And let's say the amount received is 3,800. Right? So balance at end. Right? Now, we could work this out right here. We could talk it through, but we also have to know how to do it in a T account format. Okay? So what we're going to do is we're going to do it both ways. All right, so check it. Focus for a second on the amount earned, right? So let's say you are the landlord, you have a room like that you are renting to somebody for 3,500 for the month, okay? So this is the amount they have to pay you every month, 3,500. Now, at the start of the current month, they owe you 500 from last month. So quick question. If they owe you 500 from last month and they were supposed to pay you 3,500, how much did they actually pay you last month? Yeah, last month. 3,000, right? Because if they were supposed to pay you 35 and they still owe you 5, it means they didn't pay you 500. So they only paid you 3,000 out of the 3,500, right? Now, this is the monthly rent figure, and they actually gave you 38. So at first glance, I might think, hey, they were supposed to pay me 35 and they pay me 38. So clearly, they pay me an extra 300, which is correct. They did pay you an extra 300, but you might be saying, well, that's the balance at end. No, because we have a balance at start. So if you think about it, they owed you 500 from last month and 35 from this month. So the total amount that they're supposed to pay you is how much? 4,000, the sum of the open and accrued balance and the current amount earned in the current month. 500 plus 3,500 is 4,000. How much they actually paid you? 3,800. So what's going to happen at the end? They're still going to be owing you something at the end, right? Okay. So what we're going to do, let's start. So an opening accrued balance, so an accrued revenue is classified as a current asset because it's a benefit. It's money owed to you, which is a benefit you can reasonably expect to receive in the foreseeable future. All right. So accrued balance at start. Right now, you could put accrued balance brought down. You could put just balance brought down. Right. I'm just being a bit more explicit here. Right. So 500. So this, again, is on the debit side because it's an asset. An accrued revenue is an asset, and assets have debit balances at start. Okay, so let's fill in the rest of the stuff. So the amount earned is 3,500. So in a revenue account, the amount earned is also known as the income statement figure. All right, so that's gonna go here, income statement. You could put revenue earned or rent revenue earned. I would prefer income statement because that's what it means, right? That's the amount that's going to be shown in the income statement, right? So remember, your income statement is that statement, that financial statement that shows the total revenue earned, the expenses incurred in the generation of the revenue which you earned, and the difference being either a profit or a loss. A profit if you earn more revenue than incurred expenses, or a loss if you incurred more expenses than earning revenue. All right. So this is the amount earned, right? The income statement figure is the amount earned in respect of revenue. Now, what else we have? We have the amount received, right? That goes on the credit side here because remember, your credit where the money is coming from, your debit where it's going. So this would go to bank, right? So bank, all right? So this is the rent received. Or you can put amount received if you want. Right, and that's how much? 3,800? Right. So if you look at it as it stands right now, if you add up the figures on the debit side, you get 4,000. There's only one figure to add here, it's 3,800. So clearly, we need to add a figure here to make the credit side equal to the debit side. How much do we have to add to make it equal? Correct. The difference is 200, and that is your balance carried down. Now, as we know, right, because we kind of analyze it up here, it's an accrued balance because they owed us 500 from the previous month, 3,500 for the current month. The total therefore being 4,000, and they only paid 3,800, which means therefore they still owe us 200. So that's the accrued balance at end. And then you're going to bring that down here, right? So balance brought down. Oh, yeah, accrued balance. Right. So we have this. The bank figure was, I put it in yellow, right? So that's the yellow figure. Right. The income statement was the blue. Right. The balance at start. Put any kind of orangish thing, right? And the balance at end, well, that one doesn't tie, but actually I could put that in a green. Yeah, maybe. Yeah. Right. If you're not liking the colors, let me know, I'll take them out, right? But if you find they help you to connect stuff, then that's cool. All right. Okay, Zavi, you okay with that example? All right, cool. Kaylee, are you okay with that example? All right, cool. All right, so what I'm gonna do, I'm gonna give you a few of them to work, right? So I'm just gonna kind of copy and paste this down and change up some figures. So what y'all will do, therefore, is y'all will do the T accounts, right? Okay, I'm gonna put this here. Oh, okay, I have to zoom out a little bit. Actually, okay. All right, so let me all right, RQ simply stands for review question. Oops. All right, so accrued balances start. Okay, so in the first case, let's do 1,200 here. The amount earned was 40,000. All right, okay, cool. So what I'm gonna do is I'm gonna put them. Okay, not the whole thing. I'm gonna just color code the top one, right? The top thing. So we'll do that. We'll call that one the orange one, right? And we'll use the same item as in the same revenue account, right? Now I'm just placing the questions here so I could keep everything on the same screen and don't have to kind of split up stuff. All right. This one down here, I'll put that one as the blue one. All right. So balance starts. So let's say we had 1,500. Let's say that was 700. Let's say that was 9,000. And then accrued balances. So let's say that was 800. All right, so what I want you all to do for each, oh, I have to put this one in a color too. Okay, let's make that one a bright green. Right, so you have an orange one, a blue one, and a green. And I'll leave the initial one up as the example, right? Okay. Oh, even, sorry, was there? Yeah. So what I want you all to do for me, please, is do those 3 T accounts, the revenue accounts, right? Now, the balance at end may not always be an accrual, right? So it may not always follow this exact pattern here, right? You will have the kind of orange, blue, and yellow item. The green item may not be there. In one case, it will not even have a green item. All right, so try these 3 for me. We'll correct them. Let me just go and check how these doing here, right? So Keely and Zavi, sorry, just give me 1 sec. I want to check something real quick on the other file. This is 16.1, right? Yeah. Okay. So, hold on. Does it look like something? All right, hold on. Let's put one by one. All right, so back to the old stuff, right? So I'm gonna use that to cross check their work. Well, totally come at a point. What's more important is the details. Don't worry too much with the folio. I just made it up as I went along. Or and the invoice numbers too, right? The more important thing, of course, is the date, the name, and the amount. Okay, so you give me the purchases journal. I will go read to it. Yeah, right. You only the sales journal. No, 16.1 had no sales and stuff. Right? Okay. Right. So you're in process with the T accounts? Okay. So what was paid for? Just entering the stuff in the T accounts? All right. Well, something is part of the process. Right? So see if you can finish it up and when you're ready, I'll put it up, right? Actually, I'll print it up now so you can check it. So that way you don't have to wait too long, if anything. All right, so Zavi and Keely, just give me a sec again. This one. No, didn't we? No. Okay. Let's take a look. See what's looking. No. Okay. Two pages. Oh no. My two. All right. Three. No, the one three. You know what? It's not a big deal. You can do that. Okay. Go back to the old stuff. No. when you have the transaction, right? So each person, their account is referred to as a personal account, as in under a person or another entity that we do business with. So the transactions we have there are purchases and goods, each of which has a key account. But those key accounts don't exist in the purchase ledger. You can think of a ledger like a book, right? In school, they have different books with different subjects, right? Because they want to classify and find notes for a specific subject more easily, as opposed to having everything in one book and to thumb through and figure out where is this thing, right? So a ledger is a book, long story short. And the book has a specific type of account that goes into it. So in your purchases ledger, you only have people from whom you purchase stock on credit, specifically that type of person, right? Now, the transactions with them being purchases, receiving them, even payments, those other accounts would exist, but they don't exist in the purchases ledger. They exist in the general ledger. So your purchases account will exist in the general ledger. Your purchases returns or return outwards will also exist in the general ledger. You have a general ledger, and under that, so see like how under your purchases ledger you have the 4 personal accounts. In your purchases ledger, you have the accounts of like these people, right? So these guys, Lloyd, right? So okay. But yeah, so all I do is just add the equivalent. So you have Lloyd, Scott, Wong, and Simpson, right? So all a ledger is a book where you have the accounts, right? And in your general ledger, you just have these 2 tier accounts, one for purchases, one for revenue. You can take a look at your one. And then so let me just go through these 3 tier accounts here on each community with the batch of kids. And if you need more stuff for 16.2, we can do that. Or if you have any questions on that, we can do that too. Alright, okay, so back to Xavi and Keely. Let me just shift around some stuff here. Alright. Put that there. Cut and paste. Right, so skip that line. Cool. So I want to put it here. Right, cool. Oh, I need some more lines actually. Okay, cool. So let's take a look at the first item. Let's clear out some stuff here. And let's actually push that down a little bit too. And then let's zoom in so we could just focus on that item specific. Okay, that's a little too much. Right, I think 250 is quite enough. Right, okay. All right, we ready? Oh, not ready. All right, Kaylee, you ready? Oh, in a minute or two again. Okay, cool. I'm gonna take a sip of water and we'll proceed. All right, so rent revenue, right? Accrued balance at start. All right, so an accrued revenue is an asset. As such, it would have a debit balance at start. Sorry. Hold on, I think it's a little off center here. Give me 1 sec. Right, okay, sorry. Right, so the accrued balance at start, which of course you could also just write as balance brought down, is 1200, right? Cool. The amount earned is the income statement figure. So income statement is going to go there. That's 4,800. And the amount received is the cash book figure or the bank figure. So again, you could put bank, you could put cash, you could put cash book, right? Even if you put amount received, I mean, technically speaking, it should be accepted, right? So cash book, or just cash, or just bank, right? So the receipt, that's 5,000. Right, okay, so we could balance it off now. As we could see here, if we add up this side, we get 6,000. This side, if we add it up, we only get 5. So clearly, we need how much here to make it balance? We need $1,000, right? So which is the difference between the total on that side and this side. And that is your balance carried out. Now, is it accrued, prepaid, or what? So, well, if you think about it, they owed us 1,200 from before. Then they would owe us 4,800 from the current month. If you add up those two things, you get 6,000, and they only paid us 5. which means they still owe us 1,000. So this piece here is still an accrued balance. In this case, at end, which you're going to bring on here, right? So, all right, cool. Okay, all right, Zavi, you okay with that one? All right. Kaylee, how are you feeling with that one? You okay? All right, cool. One sec. All right, lovely. Okay, so let me push that down a little bit more. And we're gonna copy and paste this item here. Oh, sorry. My bad. Right. Okay, so right, so in this case, an item to the blue item, right? So we have a balance at start of 1,500, and the amount earned is 7,500, and they paid us 9,000, right? Now, if we add up 1,575, which we have here, you get 9,000. So that's the total amount that they were supposed to pay us to clear off everything. And the amount they paid us was actually 9,000. So they paid us exactly what was owed to us. In which case, there's neither an accrual nor a prepayment. So you don't actually have to put, first of all, the account is already in balance. So we don't have to balance it. We don't have to do anything else to balance the account. All right, so for the second question, we started off with an accrual and ended up with no balance at the end. You okay with that? Yeah? All right. Kaylee, how about you? You cool with that one? All right, cool. Right, and for my last trick, actually, no, I should probably get the other one, yeah. For the green. All right, so we don't know. Right, so we have an accrued balance at start of 800, right? We earned 3,700 and they paid us 4,800. Now hold on. They owed us 800 from before and we earned another 3,700. So in total, they're supposed to pay us 45. How much did they actually pay us? 48. So they paid us more. Not just more than we earned, but more than the amount earned in the current month and the previous month. Well, the amount left over rather from the previous month. Now, what that implies is that they've paid us more than they were supposed to. And therefore, what we have going on now is actually a prepaid balance at end, which is how much? 300. And this is the prepaid balance brought down. Right? So I didn't do an example with prepayments like this for you, but we saw one before, right? And we also have a kind of exposure to balances changing from one to the other from the expenses side. So I was hoping you were okay with that. Did you get it up there? All right. Kelly, what about you? You okay with this one? All right, cool. All right, lovely. Okay, so this was the work set with questions with opening balances. Set 1, right? Accrual. Let's look at accruals, right? Give me one sec. I don't like how that lining up there. Yeah. Okay, cool. Right. Okay. So what I'm going to do now is I'm going to So revenue accounts with open balances at start, right? And this will be prepayments. Prepaid product. Cool. All right. Okay. So all right, just gonna clear out some stuff here real quick. Right, so in the example, right, so instead of accrued, we're gonna have prepaid. Let's clear out this. Actually, all the colors kind of have my little fuse. Right, so in this case, the prepaid balance at start. So let's do a nice easy figure, 200, right? The amount earned, so let's say that was 1800. And the amount received, let's say it was 1700. Okay, cool. So when we start off here, we start off with a prepayment in the revenue account, right? A prepaid revenue is a current liability because it represents an amount you have received but have not yet earned, which means now you have an obligation to either give the person back their money or to provide a good or a service to the value of what was prepaid. So you now have an obligation, right, to provide benefit to somebody else. So that is a liability, right? And liabilities have credit balances at start. So prepaid balance at start, right? So that's 200. Cool. Now the amount earned is still going to go on this side. So the income statement figure, right? What was earned? That is 1800, and then the amount received is 1700, right? That's the cash book figure, right? So that's the receipt. That's 1700. Okay, so in this case, look at what's happening, right? So they paid you 200 in advance, and then you earned 1800. So you have 200 from before, which goes towards paying off this 1800. So if you have a prepayment of 200, and then 1800 is the amount earned, right? This 200 will take care of piece of this, right? So you're gonna have 1600 left to receive from them. How much did they actually pay you? How much did you actually get? 1700. So you were supposed to just get 1600 more to clear it off, but you got 1700 more, which means you got an extra 100. Or if you look at it, right, 200 plus 1700 is 1900. This side is 18. So to balance it off, what we need? 100, right? Hey, coffee girl, how you doing? I actually had some coffee a little while ago from Starbucks. I had an Americano with an extra shot. Anyhow, right, so this is the prepaid balance at end. Oh, thanks for the follow. Appreciate it. Yeah. The past couple of weeks I was kind of falling asleep in this class, so I took some extreme measures. So who knows what tonight will look like if I'll be up like a jumbie. All right. So prepaid balance app product. UV accounts tutor in teaching, and so I'm here. Okay, cool. Well, I hope you find some benefit. I also have a YouTube channel where I have lots and lots of PoA stuff. Right? It's same name on YouTube, Adaptuation. Right? But you're welcome to stay here and soak up where you can soak up. But the UE accounts tutor, UE account stuff will be the American version. Is the British version. So there will be a difference in the bookkeeping that I do fit, right? So just be aware of that. Oh, hey Timmy, what's going on? Long time no see. Right. Okay. All right. So Zavi, you okay? Who was on the screen here? All right. Cool. All right. Yeah, man. Timmy, no vibes. Okay. So what I'm gonna do? I'm gonna zoom out a little bit so I can fit my 4 questions. All right. So yeah, no problem, coffee girl. That's fine. You're good. You're good. All right. So rent revenue. Okay. Cool. So. Okay, so that's question 1. Put question 2 here, and then question 3. Right. I forgot the colors. It was blue and green. Okay, cool. So blue and green. Let's come out over 170, shall we? Yeah, blue and green. Green, bright green. Oh, thanks for sharing, Timmy. Appreciate it. Okay, what I was doing again? Right. So just gonna copy and paste these items. Right. So basically, what you're gonna do for questions 1, 2, and 3, the orange, blue, and the green, you're gonna do this like I did in the example. Draw the T account and see if there's a balance at end and whether it's accrued, prepaid or accrued. All right. So in the first one, we're gonna have let's just go with right. In the other case, let's do All right, so you have the orange section, the blue, and the green to do. So each of them different, right? What happens to the prepaid balance? Right, okay, so a prepaid balance represents an amount we have received, right? So a client paid us before we actually earned it. So, like for me, sometimes, so my clients might pay me at the start of the month. So what would happen is they might pay me my fees, and then now I have an obligation to provide lessons to their kids over the course of the month, right? Or however long, because some clients pay in advance for the term, right? So now, from my perspective, if I'm the business, I now have an obligation to provide the clients, the students with lessons and services to the value of what I've been prepaid over that time. Now, in the balance sheet, right, the statement of financial position, any prepaid revenue, or sometimes it's called unearned revenue, is classified as a current liability. So it'll show up in the current liability section, right? And as time goes by, when I earn the revenue, what happens is that prepayment goes down, as does the liability, because I would have fulfilled my obligation. Right? In the income statement, as a different story, right? Basically, in the income statement, we only put what was earned, right? What was prepaid doesn't make it there, all right? So we actually have to take it out, right? The prepaid portion, right? So I hope that answers your question, Coffee Girl. If not, it could just reword your question, be a bit more specific, and I could try to answer a bit more accurately. But just give me a few minutes to go and check with other students and come back. Oh, I think what I did was I only did once where I had like one-on-one transaction. Because anybody who did one, all you'll do is on the opposite side, the balance carry down, and then, so there's no math there. So if you only have one transaction in the account, okay, yeah, carry down, and then just pay down. So those were the easier ones. So I just let those, and anything that had like things on opposite sides that actually had the balance off, I should do it. I just need to run upstairs real quick and come back. Do I? Should I? We can around the one that's the longer leave stuff undone. That's pretty cool. What's going on now? How are we doing? All right, cool. Oh, you understand? Okay, glad to hear that. Can I wait a half hour? I think I could be. Good. All right. Oh, thanks for sharing your life twice. Much appreciated. All right, you're all working on 16.2 now? Yeah. All right. So what I'll do, let me print out one time. All right. So Kaylee and Zavi, just give me a couple of seconds to finish print out some stuff there for the girls them. So cool. Back up and down. Oh, okay. Lots of sharing. Thank you. 1,400 likes, boy. Wow. It's pretty good for today. don't see accounts or anything, you could let me know. How are you doing? Ready? All right. 1 sec. Oh, yes. All right. All right. So what I'm gonna do is let's cut and paste that here. Cut and paste this one as well. And this one too. Oh crap. Okay, there's now. No. Okay, stop. What are you doing? Okay, there's now. Am I missing something? Cut. Okay, there you go. Not sure what was happening there, but glad it's been sorted. All right, so 250. Right, okay, so in the first case here, so prepaid revenue, right? So prepaid balance at start, that goes 1100, right? The amount received also goes on this side. So that's the cash book figure, the receipt. Yeah, that's 7,500. Oh, okay, I made a mistake with something, but let's just see how it turns out. Right, and the income statement figure here is 4,900. Okay, cool. So clearly, they paid a lot more than they were supposed to, right? That's 8,600. Okay, cool. So the prepaid balance at end is the difference between 86 and 49. So that's 37, I think. Right, cool. So add that up, and then we're gonna go down here. So prepaid balance brought down 37. All right. Zaf, are you okay with that one? All right. Kaylee, are you okay with that one? No? No, let me know when you're ready. All right. So yeah, for this one, yeah. So I think these would sort of all stayed as being prepaid. Yeah. Okay. Yeah, I was supposed to. Yeah. All right. Small thing. That's okay. All right. So prepaid balance brought down 2,500. The amount received or the cash book figure is 16,000. So that's going to give us a total of 18,500 here. And then the income statement figure is 13,500, which means that the prepaid, it's still prepaid because they gave us 18,500 and we only really earned 13,500. Sorry, yeah, at end. Right, so we need 5,000 there, not so? Yeah. Right, so prepaid balance brought down 5,000 there. Right, cool. Okay, Zaf, are you okay with that one? All right, Keely, what about you? You good with that one? All right, cool, lovely. And one for the road. Right, so prepaid balance at start. Is 5,000. The amount received is 27,000, right? And the income statement figure, is 25,000. Right, 5 and 27 will give us 32, and clearly we need 7,000 here to make this balance, right? So that is the prepaid balance at end. Sorry, I spaced there for a second, yes, boy. So prepaid balance Oh, 7. Yeah, sorry, 7. My bad. 1 extra 0. Yeah. Cool. Okay, we okay with that one? All right, Kaylee, we good with the green? All right, cool. All right, so what we're going to take a look at now is some past paper questions, right? Now, this is the same batch of past paper questions we had when we did expenses, right? Because normally they kind of pair them together, right? So, hold on, can I shift this? Right. Okay, so since 2018 Jan, they haven't brought individual T accounts for revenue and expenses like this. Right. So it says the following is a summary of Sweet Sales bank account for the year ended this 31st December. So the bank account, right? This will show us all the money coming in on the debit side, all the money going out, right? We have this figure for rent received here. Okay. The following additional information is also available. So 31/12/2016 and 31/12/2017. So this is the end of 2016. This is the end of 2017. So these balances they give us here are 1 year apart. Now we are looking at the information, for the year ended 31st December 2017, right? So this column here clearly holds the ending balances, and this column here clearly holds the opening balances. So rent revenue outstanding. So outstanding is another word for accrued. Okay. So 2,000 was accrued at start, 1,000 at end, and the rent received was 24,000. Right. So this is a little different from what we did, because in the questions we did, we had to find the closing balance. Here we have the opening, we have the closing, and we have the bank figure, the cash book figure. Right. So what's missing? The income statement figure. All right. So there, put this here. All right, so the bank account, rent received, right? So this item here. So, yeah. Okay, cool. So what I want to do is get a question. Hold on. Okay, just give me 1 sec. Okay, I'll just pull this item. This is J18. Sorry, I just wanted to delete most of this stuff here. All right, so this is the John 2018 PoA paper 2 revenue account. Okay, zoom out a little bit. Nice. Let's clear out everything here. Right, so in this question, they gave us the opening and closing balances. Now, I didn't put a date column, right? If they give you a date column to use, please do use it, right? So the opening, so revenue outstanding is accrued, and accrued revenue is an asset because it's money owed to you. Assets have debit balances at start. So the 2,000, which is outstanding at the end of 2016, right? So at the end of 2016 becomes the balance at the start of 2017, and we are doing the accounts for the end of 2017, right? So the 2,000 becomes the opening accrued balance. So the accrued balance at start, right? And then the accrued balance at end is still 1,000. Sorry, the balance at end of 1,000 is still accrued. So that's going to be brought down here. But before you can be brought down here, you have to be carried down from the opposite side, right? So accrued balance at end. Okay, cool. The rent received as the cash book figure that goes here. So cash book or just bank, right? Rent received. Okay, and what we have to figure out now is the missing figure, which of course is the income statement figure, right? So we take 25 and we minus 2 and we get 23 and that's it. Right? You could put yeah, accrued balance brought down 1,000. All right, so I'll send a picture of this in the chat. Oh, sorry. Yeah. Keely, I now see your messages. Sorry, my phone was on silent. Uh-oh. Oh. Sorry, one sec. The other teachers is messaging me. Oh. Okay. Right. So PoA Form 4. All right, so this is the Jan 2018 question as an example. All right, so what I'm gonna do is I'm gonna put up one for you all to try. All right, and I'm just gonna check Kaylee and Sean Maurice and see how they're doing. Okay. So this question is the 2016 Jan. But I'm gonna put up the other question on the board one time, on the screen, sorry. Right, and this one is the Jan 2015. Right, so on the top you have the Jan 2016, below you have Jan 2015. So the one on the top with Gargamel was owed 2,500. So if Gargamel was owed, that's accrued and that's revenue, right? During the year, an amount of 14,000 was received and deposited. Right? At the end of the year, there were no amounts outstanding or received. So there's no closing balance. There's no accrual or prepayment at end. So what you have to figure out here is the income statement figure. So you have your opening accrued item, which is going to go on the debit side, and you have the cash book figure, which is also going to go on the... No, that goes on the credit side, sorry. Right? So you have to figure out the income statement figure. And then down here now, Quella True Life earns commissions on policies sold. So they have commissions received, commissions to be collected, and commission received in advance. So this one, right, they have no opening balances. You have the amount received, and then you have two closing balances. You have to be collected means accrued, and receive in advance means prepaid. So in this one, you have two closing balances, an accrued one and a prepaid one, right? And what's missing here is the income statement figure. So I'm gonna give you guys a few minutes, see what you can come up with. We will correct it, right? Let me just go and check Healy and Sean Reese and see how they're doing. So if I go and buy from a company, purchases, right? So yeah, okay. So from my perspective, that's a purchase. And if I return to them, so it's the same entity that I'm buying from and selling back. So and in both respects, they're acting as my supplier or the seller to me. So I will just have one account to explain all the transactions with that entity, right? But however, that's a very common issue that people have because a lot of times it's not explained. I remember when we say that's like, well, when in the summer before for me. So the teacher, I remember the teacher was saying, don't open a separate T account for an item if it's already open, right? Yeah. So
And because I originally thought that, I honestly thought that the return orders and the purchase were actually two different.
they are two different transactions, but they could be with the same entity, right? So if those two transactions are with the same entity, then in that entity's account, you'll have those two things. But the purchases account and the purchases return, the returns office account are separate apart because they are different transactions. So you'll have the one person with whom you are transacting, purchasing and returning, and then you'll returns account, right? And then what some people do is they put all the individual details in each of them. But the thing is, the journal will have those details already. So the individual accounts would need all the details. And that's why the last line in the journal is total, whatever for the month, transferred to that account in the general ledger.
So if they have like a return outwards account and it's just people, and if that person, and there's just one account, I can continue.
Yeah. For that, in that one account, you could list every single reason out.
And then if that person as well has a purchase, do
Yeah.
I,
That
can
many
I,
purchases are.
okay, oh, so any purchases account, I can put both return and purchases.
No, the purchases account will have only the purchases. And the returns account will have only the returns. Right? So you might see somebody's name both in it, but you won't see both transactions as in the purchase and the return in the purchases account. Does it make sense? Okay, alright, try it and see. The accounts?
Yeah.
Yeah. Okay, I'll print out and dispatch a 10. I will put up the AC because I'm feeling cool. Alright, let me just print out some stuff for these young ladies here. Not, clearly not from this batch. T accounts. Alright, that's fine. Go back up. This item here. Right, do that. I don't know if you get to do the others, but yeah, good. Maybe some.
And journals as well.
You know? Do it here. I'll do it now, right? And you need all four. Or you just did okay, hold on. You just finished what, 16.1 or 16.2?
I didn't finish 16.2 because I ran out of pages, but I think I'm just gonna go on to 16.3 so I can do it properly.
Hold on. I'm going to tell you if you have to do 0.3 or 0.5 because I have solutions for 0.1. Hold on. I have 0.1, 0.2, and 0.5. Right. So seeing as I have solutions for 0.5, we could do that one instead.
10.5.
Yeah. But let me share up the accounts. Right. Should be, I think maybe 6 pages each. Okay, so that's. You need a minute or two again, or are you ready? Are you not sure what's going on? Not sure? Alright. 1 second. I'm going to just see if I could get that thing real quick. right, so let's take a look and see what's going on here. Where are we? Right, revenue accounts. Right, cool. Okay, so let's pull out across here. So the top one is J16, right? So Jan 16. Right, so that's Gargamel. So let's take out this stuff here. All right, so Gargamel was owed 2,500 in commission revenue at the start of the year. So if Gargamel is owed and we are Gargamel, that's an asset to us. So that's going to be brought down on the debit side. All right, so accrued balance brought down, or balance at start, 2,500. Right, and then during the year, an amount of 1,400 was received. 14,000 was received. Sorry, not 1,400. Right, so as the cash book figured as the receipt, 14,000, and then they told you at the end of the year there were no amounts outstanding or received in advance. So the only thing missing therefore is the income statement figure, right, which would be the difference. All right, so if you add up this side and get 14,000, this side has to be, well, 11,500. All right, let's do Jan 2015 one time. All right, so Jan 2015. Right, rent revenue. Oh, it's commissions, sorry. So let's change the name to commissions. Right, okay, let's take that out. Right, commissions received, paid into bank. Right, so that goes on this, right? So cash book received, right? 351,600. At the end, you had commissions to be collected. So that's accrued. That's going to be brought down on the debit side. But before it can be brought down on the debit side, right? So accrued balance at end. Right? That's 28,200, sorry. And then commissions received in advance. So that is prepaid. Prepaid revenue is a liability. It'll be brought down on the credit side. Before it can be brought down on the credit side, you have to be carried on from the debit side. So prepaid, that's 19,400. Okay, and what's missing is the income statement figure. And that's just the difference between this and this. So 360,400. Right. Okay. All right, Zavi, you okay with that one? All right. Kaylee, what about you? You okay with both of those, or you need me to go over anything? All right, cool. All right, so I think we might have time for one more. Let me see what's going on here real quick. All right, so we did 2015, 2016. Right, okay. All right, so here we have the commission revenue. Let me see if I could zoom in a little bit more. All right, so we only kind of focusing on this part here. All right, so you have accrued commissions at the end of 2008, it's 1,500. And you have commissions received by check. You have two amounts during 09 of 7,000. And you still have accrued commission at the end of 2009. So clearly you're doing the commissions account for 2009. You have an opening balance of 1,500, closing balance of 25, both of them accrued, and you have two amounts received. So what you're looking for, as they say in here, is the show clearly the amount transferred to the income statement. So this, by the way, is the 2010 question, right? So I want you to do up the commission revenue account for me as quickly as you can. We'll correct that one, and then we'll call it a day. Right? When we come next week, we'll finish all the rest of the revenue accounts, and then we'll proceed to another topic the week after that. Probably, I'm feeling depreciation. Are you guys working in school right now? General journal. Okay, cool. All right. And what about you, Kaylee? What are you guys working in school currently, PoA wise?
We are still looking at depreciation, but now instead of just doing the straight line method, we're doing another one.
Reducing balance. All right, cool. Okay, cool. So starting depreciation would help you.
Yeah.
All right, cool. Right here. So we should probably round this off next week. And Yeah, we might even be able to start depreciation next week, depending. But I'll see how it goes because I'll be doing something with you and Zabi, and then something different with Haley and Shelmaris. But we'll see how it goes. Because by next term, I try to harmonize.
Okay.
All right, cool. Right, so that and that. See how the young man is going. Light bulb. Oh, my bulb went. Okay, cool. All right. So we'll see you tomorrow, right?
Yeah. Okay, bye.
All right, see you next week, right? Come on, later. All right. Oh, like bulb going on. All right, so let me see if I can do this kind of quick. Put that to the top, and then this is the 2010 I said, right? All right, so Jan 2010. All right, commission, right? So we had accrued. Okay, so hold on. So on accrued commission, on accrued revenue is an asset because it's money owed to us. Assets have debit balances at start. So accrued balance at start. That's 1500. Cool. Commissions received by tax. So the two, we'll put them together, right? So bank as 7,000 by 2 is 14,000. Now you can show them separately. I'm choosing not to. And the accrued balance at end. All right.
One question
Wow.
left. Yeah.
Wow.
Literally had 0 questions when she was doing it. She was literally,
Yeah.
she just sat down and did all of them. No questions. It's really, so I'm taking this whole now over and
Cooking with high octane gas there, boy. That is
Yeah, I was like-
CNG.
Yeah, I was like, we said the next couple days, like couple weeks.
Yeah, boy.
So I guess it's sign a cost next week.
Yeah. If she informed for, yeah. I have plans for that.
Does she do month as well, or?
You've talked to her way more than I have.
Okay.
I've said 10 words to her maybe.
Okay, but
All right.
Quite literally,
Yeah.
all of them done. No, none of them left.
All right.
I'm sorry, anything.
How about Kimura?
Come on. Very, she did. She good. I think it was
Okay.
maybe just like a little nervous.
At the start.
Yeah,
Okay, cool.
so-
And when she
but-
sank into it.
Yeah. So, but today, like, I think she called her group, so we got your calls on time today.
Okay.
Yeah.
Okay.
So next week is just
Cool.
to do mixed questions.
All right, cool.
But
Lovely.
yeah, no, everyone is doing very good.
All right, lovely. I'm glad to hear that.
And then also tomorrow he has a test in math on
Right.
area of simple shapes.
Okay, cool.
Oh, we went over like all of these shapes. And
So she should be okay.
Yeah, she said she was confident for it. So yeah, we'll see you tomorrow.
All right.
guys.
All right, cool. So see you.
I'll need you to just mark off the
Oh,
Thursday.
yeah.
Thursday.
Okay, cool.
Thank you.
All right, later.
Bye, guys.
All right. Okay. Zavi, we okay with that one? All right. Keely, we okay with this account on your screen here?
Yes, I am.
All right, lovely. Okay, all right. So we'll call it a day there. When we come back next week, hold on. Let me see. Maybe I could give you guys one for homework because honestly, there aren't that many more. Right. So this one. All right. So this one. Yeah. Okay. I'll send you a pic of this one. Right. And all you're really doing is the commission stuff. So just do this account for me. It's just one account, right? Just the commissions. And I'll tell you which year it is, right? So just the commissions. Wow, I spelled that wildly incorrectly. Commissions revenue account. Yeah, just do that one, and then actually next week we could probably move on to something else, because there's. Oh, it have two here. Okay, all right, no, I'll send you this one. You can't miss out this one either. Right, so you have 3 for me, right? And I mean, it's a whole week. So items 3 and 4 only. All right, cool. So that's it. I went overdo. All right. So Kaylee, I'll see you next week. But I'll look out for pics of those questions, the solutions, right?
Okay.
Okay. All right. Bye.
Can you send it in the practice?
I did. Did I not? That's what I was doing. I was taking pics. Where's it? Yeah.
Okay, I didn't see it. Okay,
Okay.
I see it.
Okay. Cool. There you go. All right. Lovely.
Bye.
All right. Bye. Bye. Okay. And right. Conflicts. Oh. Sorry. Conflicts. Hard luck. Oh yeah. Oh yeah. I had 4 on YouTube, boy. How y'all doing? Yeah. Well, I done it for today, so I'll see you guys next week. Right? If you're anybody doing cape accounting on for Saturday morning 10 to 12, I have a unit 2 class. We start in something called marginal versus absorption costing, or variable versus absorption costing. So if you know anybody in Form 6 doing cape accounting unit 2, you can let them know. Next week, Monday and Wednesday, 4 to 6 is Form 5 PoA, half 6 to half 8 is Form 5 maths. Yeah, the maths